Ladies and gentlemen, good morning. First of all, I would like to express my sincere thanks to SteelOrbis and IREPAS for inviting me to attend this conference in such a beautiful and historical city, Budapest. In the same time, I'm really happy to meet many of our old friends and partners. Some of them we have even cooperated for more than a decade. So today I'd like to share with you the information of the latest development of Chinese steel market. From the eye of our company, Yonggang Group, we are one of the important participants in China's steel industry, especially in the non-products, and one member of China Iron and Steel Association. Generally speaking, last year, China's steel industry got recovered from the past 4 continuous years of price decrease, went on the way of capacity reduction and price increase, and returned to a net profit after big loss in year 2015. So today, my presentation will be focused on Chinese steel market and export, with 3 detailed parts of update to Chinese steel market, China's steel export, and outlook for 2017, and with the brief introduction of our Yonggang Group. So let's see the first part. Crude steel production. China's crude steel production in last year reached 808 million tons, returned to a growth of 1.24% after 2015, accounting for around nearly 0.5%, nearly 49.6% of world crude steel production. And for early this year, January to February, China's crude steel production reached 128.77 million tons, up by 5.8%. So for the consumption in China, China's apparent crude steel consumption reached 709 million tons in last year, registered a growth of 2.08%, returned to the positive growth after 2013. We can see a continuous 2 years negative growth in year 2014 and 2015. Let's see the steel price in China. Compared with the continuous price decrease in year 2015, last year, China's steel price began to rebound, mainly in 2 periods. That's March to April and October to December, and it was further up in early 2017. We can see the statistics, especially the sharp increase in early January, February after Chinese New Year. So we see the rebar price. We mainly produce rebar, and our brand is top brand in East China. So our price represents East China rebar price. So we can see that our rebar price increased by 68.5% in the whole last year, starting from 1,840 RMB per ton in early January into 3,100 RMB per ton in December. And our rebar price further increased by 17.7% in the past time of 2017, till RMB 3,650 per ton on 10th March. So generally we can see it's a continuous generally uptrend for the rebar price in China starting from June last year. So let's see the iron ore. China's domestic iron ore production last year reached 1.281 billion tons, down by 3%. But on the opposite, China imported 1.024 billion tons iron ore last year, up by 7.5%. And we can see the iron ore price, the plus iron ore index price of 62% Fe CFR North China increased by 86.5%. From around $42.7 per ton early January into around $80 per ton in December, and it was further up by 8.5% into around $86.4 per ton till 10th of March this year. So we can see from these statistics, generally Chinese steel price and the import iron ore price show a quite close same trend. Coking coal. Last year, China's coal production stayed at 3.36 billion tons, down by 9.4%. China already reduced more than 290 million tons of inefficient coal mining capacity last year. And last year, China imported 59 million tons coking coal, up by 23.4%. Coking coal price at Tanshan area, North China, increased by 141% in whole last year. So we can see the statistics. The imported coking coal price showed the similar same trend with domestic coking coal price. So for the metallurgical coke, last year, China's metallurgical coke production stayed at 447.63 million tons, up by 0.3%, compared with 0.74% growth of pig iron in China. Chinese metallurgical coke price in North China increased by 183% in last year. And during the January-February this year, the metallurgical coke price showed a decreasing trend, but still stayed at a high level. So generally for the past year, the steel price in China increased around, for example, Rebar 6-8%, but the raw material price increased much higher than this. Iron ore increased 86%, coking coal price increased 141%, and metallurgical coke increased by around 183%. So second part, let's see China's steel export. China's steel import and export. After consecutive 6 years growth, China's steel export turned to decline last year. China exported 108.49 million tons finished steel products last year, with a decrease of 3.96 million tons, down by 3.48%. On the opposite, China's import finished steel product increased by 3.4% and registered at 13.21 million tons last year. And during January-February this year, China's accumulative steel export for past 2 months registered 13.17 million tons, with a sharp decrease of 25.7% year-on-year basis. We can see from the statistics, generally from July last year, China's steel export already showed a generally continuous decreasing trend. Let's see the steel export to Europe. Last year, China's finished steel products export to Europe Union decreased by 24.53%, while the export to whole Europe decreased by 20%. We can also see that the statistics of Chinese export to USA decreased by more than 50% last year. I think it's mainly based on the trade protectionism from USA and from the Europe. So let's see the long steel product export from China to Europe. Last year, China's long steel products and square bars, but because in China square bars are registered in the symmetric code with long products, the rebar. The total export tonnage decreased by 4% year-on-year, whole China, but the export of long products and square bars to EU and the whole Europe decreased by 44.4% and 44% respectively. And its similar situation is mainly owing to the anti-dumping cases, the trade protectionisms in Europe. So we can see the proportion of steel export on total steel production in China reached high in year 2015 and then become decreased in last year, and it further significantly decreased in January, February this year. and we can expect that the further decreasing in the coming quarters. Is the analysis of China's decreasing export for a moment. We think that there may be three reasons: the slowdown in the global economic growth. Second is the continuous aggravation of international trade protectionism. Last year, China already suffered 119 trade frictions, and 49 from 119 trade remedy cases are against the Chinese steel products, among which anti-dumping 32 cases, subsidy 10 cases, safeguard 7 cases. And the third reason is that Chinese steel price rebounded strongly from year 2016. The competitiveness of export price have been weakened gradually. So we can see from these statistics that from June last year, the steel price in China continues to increase, and the steel export from China showed a continuous decreasing trend. So let's see the third part, outlook for Chinese steel industry in this year. First, let's see Chinese economy. The Chinese economy rebounded in Q4 last year with a GDP growth rate of 6.8%, up slightly by 0.1 percentage points over Q3 the same year, and to be flat with the same period 1 year ago. China has set a GDP growth target for this year of around 7.5% and try to achieve better results. This will lay a solid foundation for development of China's steel industry this year. PPI, which measures cost of goods at the factory gate, hitting over 8-year high of 7.8% in February 2017. We can see from the statistics that this is a strong PPI rebound, and turnaround in Chinese heavy industry have improved corporate revenue, profit growth, and debt service capacity, leaving the real economy much better placed to tolerate higher nominal rates. The domestic steel demand forecast this year. In this year, as estimated by CISA, China's automobile industry will keep growing. The growth of real estate industry may slow down a little bit, but the investment in infrastructure construction will be a bright spot. So generally, China's domestic steel demand will remain stable in this year. For the reduction of excess capacity, I think everyone pay high attention on China's reduction on the capacity in steel and coal mining industries. So our government already set the targets in 5 years, starting from 2016. In the steel industry is to reduce another 100 to 150 million tons of crude steel capacity in the coming 5 years, starting from last year. And in the coal mining industry, China will reduce 500 million tons of coal mining capacity and will reduce another 500 million tons production through the mergers and reorganizations of the coal enterprises in the coming 5 years. So what results achieved in last year? We can see China has already reduced more than 65 million tons of inefficient steel capacity. And concerning the coal mining capacity, China has already reduced more than 290 million tons. And the target in this year, Chinese government already announced that in this year, we will reduce further 50 million tons of inefficient steel capacity. And before end of June this year, we will finish phasing out the production of low quality steel made from medium frequency furnaces by scrap metals. Chinese call it 地条钢. So that's the main reason why for the time being, Chinese rebar price so strong, and we trust, we're expecting this price can be generally stable. And concerning the coal mining capacity reduction, the target in this year is to reduce 150 million tons of inefficient coal mining capacity. So we can see China already set 5 years, reducing overcapacity plan, and we just take 1 year. Last year, the steel we finished around more than 40% of our target, and for the coal mining capacity, we already finished nearby 30% in last year. So together with this year's target, we are confident that China, can fulfill the reducing in the excess capacity in steel industry and also in the coal mining capacity industries. In summary, this is our expectations and outlooks for Chinese steel industry in this year. Efforts to reduce excess capacity will continue as it is undergoing in Chinese steel industry. Efficient supply level will continue to improve. It means that the utilization of the present capacity is continuous increase in China, also worldwide. Steel industry mergers and regionalizations will be further promoted. It's mainly happened in state-owned mills in China, and the government also promoting the private sections to do similar jobs. Steel consumption will remain stable. As we can see, last year the Chinese apparent steel consumption increased, and we can expect this year this Chinese crude steel consumption can remain. Long product price will generally show a stable and may further uptrend. It's basically based on 2 reasons. First is phasing out the production of detailgang, because this medium frequency furnaces is producing basically steel billets and rebar in coils. So the government already announced that before end of June this year, we will phase out all this capacity. So we think that this will help to propping up the rebar price generally this year, especially in the first half year of this year. And the second is increased investment in infrastructure constructions. The GDP, basically nowadays we can see the past 2 months, China's investment in the construction areas is a big up. So steel export will show a significant decrease, especially for long products. We have already seen that Chinese steel product export decreased last year and see a more significant decrease in the first 2 months of this year. And we can expect the further decreasing in the coming months, especially for the second quarters of this year. So this is our expectations, outlook for Chinese steel industry in this year. And in the end, I'd like to take this chance to briefly introduce our Yonggang Group in 2 or 3 minutes. We located in Zhangjiagang City, Jiangsu Province, just 100 kilometers from Shanghai and 10 kilometers from the Yangtze River port. We Yonggang established in 1984 with presently 9 million tons of steel making and steel rolling capacity, 8 million tons from blast furnaces, and 1 million tons from EAF. We have an employee of 10,000, and sales income last year is $4.4 billion. Our products are mainly rebar, which takes around 50% capacity with 4.5 million tons per year. And second is wire rod with 3.5 million tons per year, and round bar in 1 million tons, so total 9 million tons. This is the main specifications of our products. For example, rebar, we have BS standard, we have DIN, Como standard, STM standards, Malaysia, Korean, Australian, and we can produce rebar in coil from 6 to 16 millimeter, rebar in straight 10 to 50 millimeters. For wire rod, we have low carbon, high carbon, cold heading quality welding wire, pre-stressed steel bars, and wire rod for steel cord and bead wires. We can produce size from 5.5 to 26 millimeters. And for round bar, we are mainly focused on the special steels. We can produce size from 75 millimeter till 350 millimeters. So this is the certificates, part of the certificates we have got. For example, the DCL, KS, Kiwa is a certificate and homologations for our rebar products worldwide. This is some examples of our applications for our finished products. For example, rebar in mainly international main buildings and constructions, and for the wire rod and round bar in the different industrial applications. We want to emphasize that we have a strong logistical advantages for steel export because we have our own Jiangsu River port with 10.8 freshwater draft and available for berthing capesize vessels. So the port is about 10 kilometers away from the mill and provides strong advantage for raw material import and steel products export. So concerning our export, we started export from year 2006 and exported 2.6 million tons last year. Was always one of the main non-steel producers and exporters in China. Our products have been exported to more than 100 countries worldwide and areas. So concerning our export to Europe, all our main products are exported to the European market. For example, wire rod, we export to mainly Spain, Italy, Portugal, that's before the financial crisis. And in year 2008, anti-dumping cases existed, and after that, we can do nothing. Second is rebar. We mainly export to UK, Germany, and Netherlands. And see the situation, for the past 5 years, we are doing good in UK, and the anti-dumping cases coming in year 2015, and since then, nothing we can do. And now we are mainly exporting round bars to UK, to Spain, to Italy, to Portugal. So this is my presentation, and thanks for your attention, and please be free to contact with us if anything we can do. Thanks.
Are there any questions from the floor for Mr. Yu?
Hi, Chris from Argus Media. I just wanted to know, I'm not sure if you can answer this question, but I just wanted to know about China's aims for medium arc furnaces. As you mentioned, they were planning on reducing capacity for those furnaces. But why do you think that China doesn't want to use scrap? It wants to continue using blast furnaces and iron ore and coke and coal. Why is it that maybe that using scrap would actually help with the pollution problems that continually stop production and restrict production in steel producing cities? Why would it not use scrap instead?
A good question, but maybe you misunderstand our aim, because we want to use scrap, but this medium frequency furnaces is producing no quality steel. It's not modern furnaces, they cannot refine the steel, so the rebars can be easily broken, for example. So this is illegal. So the government, the central government already put, the pressure to local governments, and we can feel generally starting from last November, the provincial government take really actions against this. And so I think generally China is welcome using of scraps, on the long term. For example, in the short term, we have disadvantages in the cost because the iron ore price increase. We can see the China is also reducing the capacity in the coal mining industry. So we can see the metallurgical coke pricing increased last year so sharp. So nowadays, just based on the reduction on the excess capacity in the medium frequency furnaces, so scrap price in China is generally stable. Compared with steel price, it's not up so sharp. So on long term, China will, I think, enlarge the use of the scrap.
Thank you. Are you going to have the question?
Lee Allen from Metal Bulletin. I was wondering, some people have said they think it's possible that China could increase exports in the coming months with high stocks in the country of material that could be flat products as well as sort of wire rod. What factors and conditions would you expect to see in the Chinese and global steel market to enable China to start exporting more material again?
We can see generally, starting from last year, China's steel export started to decrease. It's mainly owing to two reasons. This first one is trade protectionism. Second one is the Chinese continued price increase. It means that nowadays, for example, the rebar price, we are the toppest worldwide. Even Singapore and Hong Kong, they are buying not from China. They are so, neighborhood with China. Because our price, domestic sales quite good and much more profitable than the exports. So my expectations for the long product, we already see this trend, and now it's already end of March. So we can see the coming 1 or 2 months, the orders have already been taken. So we can see a further sharp decrease on China's steel export in the coming 2-3 months. That's my personal feeling. So generally this year, China, with the continuous efforts in the reduction of the capacity, on the same time, China is booming the economy, by putting more investment on the infrastructure. We can see the past 2 years, China's real estate market is booming up again. So the construction is, the demand in the steel, the consumption, we can expect this year should be, similar like last year or even better than last year. So based on these two, reasons, capacity reduction, and on the other hand, the domestic consumption increase. So we can see, some percentage of Chinese steel export decreasing is reasonable. And after the Chinese New Year, the stock, we have already seen the continued decreasing trend, not further up, starting from March. So it's a good signal also.
Thank you very much. I can feel the relief in the room.
Yeah.
One last question.
Yes, this is Doğan Baysal with SIBA International. I noticed that you said that the coal mining capacity is reduced by 290 million tons. That's huge. Is that because of the demand that's been reduced, or is it because of the environmental reasons? That's the first question. Second one, well, you keep saying this, they were reducing the capacity, but really, we already know that you have about 20 to 30% overcapacity of what you produce. Are you going to really reduce the production, or are you just talking about the capacity that was idle anyway?
So first question concerning the coal mining capacity last year, we already reduced 290 million tons. I think it's mainly owing to, for past, 3-4 years, continuous price decrease and suffer huge losses in the steel industry as well as in China's coal mining industry. So the last year, the government controlling by working days of the coal mine to reduce the output, the coal, as well as phasing out the illegal, inefficient coal mining capacities. I think that's just based on the demand is stable. We can see last year the demand for the coking coal, for the metallurgical coke is increased because China's steel output is increased. Our consumption is increased, but just controlling the supply side. So the price increased sharply last year. So this year, the government already confirmed that we will not take the same actions like last year, keeping around 276 working days. This year, we're not doing like this way. So basically, that's the reason why for the past 2 months is the coking coal price and metallurgical coal price a little bit weak for the past 2 months. And for the present, it's stable at a high level. And second question is concerning the capacity. Chinese government mentioned that we are reducing the capacity, not reducing the production. We can see the Chinese steel production increased last year. And the world production is the same because our consumption increased. We are keening the capacity of which capacity are illegal, inefficient, in low quality, not safety. But we just want to increase the utilization of the efficient capacity, legal capacity, safe capacity, and profitable capacity. So I think China will keep on the way of reducing capacity, but the real production will be based on the market situation. But I think China's, for example, our export percentage showed a decreased trend, So China mainly, based on our domestic consumption of the steel.
So hopefully domestic consumption will keep on increasing. Thank you very much. Thank you.